Now, on this Christmas Eve, Indian equity markets traded modestly higher in a subdued session, buoyed by positive global cues and steady domestic buying, even as year-end holiday mood kept volumes thin. The BSE Sensex hovers near 85,513, while the NSE Nifty 50 rose about 50 points to trade above 26,230 in mid-morning. Now, gains were led by financials, metals and select heavyweights like Bajaj Finance, NTPC and Axis Bank, which rose up to 2%. Broader markets showed resilience with mid-cap and small-cap indices edging up 0.0 to 0.3%. However, if stocks remain under pressure, dipping around 0.5 to 0.6% amid concerns over new US H-1B visa rules that could impact Indian firms by prioritizing higher skilled workers. And I have Dr. Sharat Kohli, senior economist, joining me. Now, Dr. Kohli, how do you see the Indian equity markets currently trading very modestly?
Well, good afternoon, Vaishali. Good afternoon to NewsX viewers. I think it is Christmas Eve and a lot of Western markets are already closed. They are doing a truncated session today. They will not be trading for full trading hours. Most of the Western world goes on holiday during this week. So we are not expecting very high volumes, hence not very high movements also in the market. The market, as you rightly said, is moderately up. The Nifty is up by about 20 points. So just a kind of a holiday mood in the market. But overall, the market has shown a lot of resilience in the past, and the market is very close to, we're talking of the Indian market, very close to all-time high of 26,277 in terms of Nifty. So I think undertone of the market is back to being bullish because of some encouraging response from the FIIs and the FPIs who have occasionally been buying now. They were net sellers earlier all through. But now on odd days, they are buyers. Apart from that, the Indian growth story remains. All the Indian economic parameters are looking good. Inflation is down. Rupee has also recovered somewhat after being down to 91 against dollar. It has recovered to about 89.90 because of RBI intervention. So overall, market sentiment is not all that bad, although the realistic picture would only be known once the holidays end, and the market is closed tomorrow, by the way, for Christmas. And then it opens again, unless there is major news trigger. You will see market remaining subdued till about January, early first week, Vaishali.
Now, Dr. Kohli, my question is that is India showing relative resilience compared to other emerging markets amid current global conditions?
No, the other markets also are not doing all that bad. The American markets are hitting all-time high, although I have a feeling that there is some artificial lobbying about the market in as far as the US is concerned. I mean, I'm not really believing the numbers coming from US, the economic numbers. But then, I mean, even if we take them at the face value, the markets around the world are not doing all that bad. I mean, the American markets all-time high, European markets also moderately performing. Well, the Indian growth story is backed by fundamentals. That's the difference. So the story in the Western world is not backed by adequate fundamentals. There are some artificial triggers there. But Indian growth story is very real, and all the economic parameters are very good. So I think it would be unfair to talk about the world markets at this point of time. But Indian market, as I said, the undertone is bullish and the fundamentals are very strong, Vishal.
Thank you, Dr. Kohli, for joining me on the broadcast.